But Marko Papic is joining us, macro and geopolitical expert at BCA Research. Marko, always a pleasure to speak with you here at NDTV Profit.
Same.
And welcome back. All right, I want to start straight off the bat with the economic concerns in the US and stagflation, low growth, high inflation. That's the recipe that the Federal Reserve has been talking about. But are those concerns real? Because we've seen this act before, or we've seen this story play out before, concerns about the US economy, and then the data doesn't follow through.
Well, it's very exciting right now, I got to tell you. There's so many things going on. I mean, just a few of the things you just mentioned yourself, are playing in the markets right now. So you have oil prices potentially going up significantly because of tensions with Iran. That would add to those inflationary concerns. One thing I would say about that is we've had two recession scares in the last 2 years, right? In 2023, it was the Silicon Valley Bank collapse, if you remember, in early 2023. What that led to was a significant drop in the bond yield. We went down to 3.25% as a consequence of that scare. And then in 2024, if you remember in the summer, there was that Somme rule hysteria, if you will, where again, the 10-year yield dropped significantly to 350. This time around, that didn't happen. And so while I would agree with you that in previous two episodes, there was sort of a rebalancing mechanism that allowed data to pick up because borrowing costs in the United States went down, this time around, the 10-year yield, the borrowing costs for the entire United States of America are basically holding at 4.2. So I would say that those stagflation concerns are preventing this natural rebalancing mechanism from helping us overcome this recession concern.
Okay. Marko, hi, morning. And I do want to give you credit because you were, at least on our program, one of the first people to call for the dollar to have its last hurrah when it was around 108, 109, and it's at sub 104 right now. The question is, where does it head going forward? What are the moving parts that you see that could influence the dollar's move further lower? And what implications does it have for flows into emerging markets, which, by the way, for the first time have actually been reasonably sizable in yesterday's session in the Indian equity market, flows into?
I think you're being perhaps too kind, because while I have a very secular bearish view on the dollar, if I remember correctly, in January, I think we talked and I said, it's more of a Q2 story, maybe end of Q1, call me then. And what happened was, no, it was a January story. The dollar peaked right away. And I'm very excited about that as well, because I think that what's interesting about that is the market doesn't need any more confirmation, that the dollar is overvalued. And then I would argue many US assets in particular are overvalued. So it has moved very, very fast. Now, of course, the DXY, which I believe you're referencing, the DXY is really focused on the euro. And I think that there is part of this dollar weakness story right now that's really overemphasizing the German fiscal story, which I'm sure you've covered as well. So I think maybe the dollar move has gone a little bit too much that even I, who's at this point a dollar bear, thought possible. Nonetheless, what I would say to you and your viewers in India, but also in Asia broadly, is while there could be a temporary pullback, I would just ignore that, because I think we're on a 2 to 3 year trajectory for the US dollar to decline quite significantly. I wouldn't be surprised by a 30% decline over that 2 to 3 year period. And that's obviously very good for emerging markets. And the reason for this is that both some of the policies that are being affected are dollar bearish. I think it also has to do with the fact that we've had a bull market in America for 15 years. But finally, I don't think the White House would be too mad if the US dollar declined 30% over the next 2 to 3 years. I mean, if you think about it, that is a 30% across the board tariff on everybody else, but one that's kind of diplomatic and doesn't really make anyone angry.
Okay, Marko, sorry, did I hear you say 30% decline in the dollar index?
Over the next 2 to 3 years, yes, 30%. I would say that. Yeah, I mean, look at what's happened just over the last 6 weeks relative to the euro. It's like it's down 8%.
Yeah, agree. Okay, one quick thing. I mean, the geopolitics is kind of not coming around as people would have thought it would post Trump coming in, right? I mean, Israel doing what it is doing right now again, and that whole ceasefire agreement, but also Ukraine, Russia. So would you believe crude, which had completely sobered down, could have a flare up as well? Or is the larger trend lower? Because even during the worst political news in the last 6 to 9 months, crude has not gone above $85 a barrel.
You know, it's a great question. I mean, I speak to a lot of hedge funds in New York and just investors broadly. And it's interesting, many of them saw the Ukraine-Russia ceasefire agreement as somehow bearish for crude. I struggle, I don't see it. I disagree. Russia's not going to export any more crude. As we know, and especially your viewers, India and China have been buying Russian crude. It's been getting out. There is no real sanction against that. There are no secondary sanctions. You mentioned in the introduction segment, you were talking about, for example, going after Chinese buyers of Iranian crude. That actually does not exist for Russians. So I'm not really sure why anybody was bearish oil because of that agreement, right? Now, I can see why recession risk and recession probability rising would make people want to be bearish crude. That's fine, and that's appropriate. But if we are looking at kind of netting out the geopolitics, the Iran situation is pretty concerning. Iran has started actually moving some of its enriched uranium into the higher enriched uranium category, which is used for, really only weapons production. And we've heard some bellicose rhetoric out of Israel. There's an additional component here that I would just float out. I hate conspiracy theories, hate them. However, if you are going to incur a recession as a president, you know what helps keep your approval rating relatively stable? Ask Bush Sr. and Bush Jr. Both were aided in terms of approval rating because of a geopolitical calamity related to the Middle East. So that is something that I would point out there as well. It may serve President Trump well politically if the situation in Iran were to get a little bit more problematic and, if I dare say, kinetic.
So we've got lots of takeaways from this conversation. Marko, as always, thanks so much for joining us this morning. Pleasure speaking with you.
It's a real pleasure. Thank you.